if you passed away, but you had the ability to view your funeral and you had the opportunity to listen and watch somebody give a eulogy about you, the first thing is, what would they say about you? And what would you want them to say? The second part of that is, what would they say if they absolutely couldn't lie? If they took truth serum, if they were on a lie detector test and they had to tell the truth about you, what would they say? And is there a gap between what you would want them to say and what they would say?
Welcome back to the Better Than Rich Show. In for another great episode today with Alex Pardo. And Alex and I talk very in-depth on storage units and the investment opportunity with storage units. And I was a guest on his show, and then this is him on mine. And I love Alex. We're in Front Row Dads together. We talk a little bit about that. He's such a great dude. But what's kind of cool is Alex, he worked for General Electric in their financial management program. But before starting his first business, he backpacked around Europe for 3.5 months, truly living the time-rich lifestyle. He visited 23 countries and 51 cities. And then he started wholesaling and flipping single-family homes in Miami in 2005. He closed north of 750 transactions. And he's also founded and led a high-level mastermind for entrepreneurs to help them with their businesses and also create better lives. In 2020, he transitioned from houses to storage, currently owns 3 storage facilities in Florida and Mississippi. He has over 838 units in total and over 104,000 net rentable square feet. Alex has combined his expertise in coaching entrepreneurs with his knowledge of owning and operating storage facilities, is now focused on helping anyone purchase their first cash flowing storage facility within 6 months without having any experience or needing any of their own money. We talk a little bit about that as well during this episode. His podcast is called The Flip Empire Show. It has over 700 episodes, truly strong platform, and highly recommend you checking that podcast out. He is a man of faith. He's a family man first. His wife, Natalie, and him, they have 2 beautiful girls, Ariana and Alicia. And his top priority is being able to be a family man with a business. So check out this episode. I think you're really going to love it, with Alex Pardo talking about storage units and everything that has to do with being a family man with a business. Here we go. Welcome back to the Better Than Rich Show. I'm your host today, Mike Abramowitz. I'm here with my dear friend, Alex Pardo. Welcome to the show, brother.
Thank you, Mike. Dude, it's an honor and a pleasure to be on with, man. I always enjoy connecting with you. We just spent some quality time in the Keys together with a group of other Front Row Dads, and it's great to be on your show, man.
Well, I'm honored that you're taking the time, man, and I'm looking forward to bringing you to our audience, because you are an expert. We had Justin Morgan on the show riff on this, and his episode did great on the storage units, and we wanted another expert. The guest wanted another expert, so here we are. Listener, get ready. Alex, 838 units for over 104,000 net rentable square feet. You have mastered what it means to invest passively. And I know a lot of people that listen to the show, they're like, okay, I have my business. I want to make money for my business, but I want to take that money and put it to work. And storage is one of those assets that I think is not talked about enough. So having you here to really riff on that to kick us off would be great. So if I'm listening here, and let's say 2 paths. I have one path where I have a certain amount of money that you deem that would be appropriate to get started with using my own money, and then access to other people's money. Option A. And then option B, I really don't have that much cash, but I have time freedom for my business because I built these systems, but I have a little bit of time, so I could invest that time to go either get cash or, be a little bit more proactive. But if I wanted to go 0 to 1 in the passive investment or the active investment route with storage units, what is the counsel? I'd just love to have you riff on that and just kind of melt our listeners' faces off with just some counsel starting here. So I appreciate that. Yeah,
brother, it's such a good question, and we can go in so many different directions with that one. It's a loaded one. So the first question I'd want people to really consider and ask themselves is, based on the season of life that you're in right now, are you an equity investor or are you a cash flow investor? And I think there's a difference between the two. Oftentimes I connect with people, Mike, that want to get involved in storage because they want to generate cash flow, but yet they haven't really built their net worth up. And what I've discovered coaching people and working with them is that when we really peel the layers of the onion back, what they're really after is equity, building up more capital so that they can redeploy and start to build the cash flow and the passive investments, if that makes sense. So the first question is start there. Really take stock and inventory of not only your resources, and I'm going to get there in a second, but like, are you really after cash flow today? Because maybe you're in a business or, whatever you're doing that you're looking to replace that. Or are you looking for equity because you love your business, you love what you do, you want to focus on that. Those are your strengths, your talents, your unique abilities, and you're just looking for investments that continue to provide cash flow, right? Like that's the purpose of assets, to spit off cash flow, and then we want to make that money grow. So let me start with the latter. Let me start with the person who's got time freedom because of their business, but maybe they don't have a lot of capital. The first thing you need to do is, I just mentioned it, take inventory and stock of all of your resources. Money is just one resource, Mike, but as you know, our network, the knowledge we have, the experience, connections, like there's so many other resources that I think sometimes people take for granted. And, I've talked to a lot of people that just default to money as a resource. Money's just one tool. It's just one resource, right? So one of the things I love about storage, dude, by the way, is that, compared to other asset classes like multifamily or single family, we're not dealing with tenants. We're not dealing with toilets. It's a very sticky product. It's a very sticky service. So when somebody moves their stuff into a 10 by 20, generally speaking, they stay for years and they pay month after month after month. In fact, at 3 of my facilities, most of our tenants have been with us for over 18 months and they tend to stay. So if you're somebody who's got time freedom, figure out, using your strengths, using your unique ability, your resources, how can you potentially add value to a deal? As an example, one way of adding value to a deal is going out and finding the opportunity. Like we look for mom and pop operated storage facilities that are in secondary or tertiary markets that have a population anywhere between 1,000 people all the way up to 60,000 people. And specifically, I'm looking for markets where the household median income is above $50,000 a year and where the population is increasing year over year. So generally speaking, like that's my framework. Like I live in Miami, Mike, and I've never spent 1 minute of looking for storage facilities in Miami. Big cities like Miami, Vegas, LA, those are run and dominated by the REITs, the real estate investment trusts, like the public storages of the world. So if you have time freedom, that is just one way. Go find an opportunity and bring it to an operator like myself, and you can carve out equity and or cash flow in that deal. Another way is, let's say you don't have money, but you know people who do have money. I've had people connect me with private lenders and make an introduction. Hey, Alex, meet this person. He's got some capital he's looking to deploy. He's looking for XYZ. And if something comes of that opportunity and he becomes a lender in one of my storage facilities, then that person who made the introduction can either get, I'm not an attorney, I'm not a CPA, so like consult with the pros, right? There's my disclaimer. But you might be able to carve out a piece of the deal or carve out some type of fee for making that connection, right? So take inventory of your resources if you have time. Now, I'm guessing there's a lot of people, Mike, that listen to your show who they have money and they have access to resources where they can just deploy. The number one tip I can give you is underwrite, i.e. evaluate, analyze the operator before you even look at the opportunity. So before you look at the investment vehicle, whether it's storage, multifamily, any type of asset you're interested in investing in, I would first ask yourself, is there an alignment of core values? Can you trust the person? Do they have a proven track record? Is there competency in that arena, right? I have found that the investments that haven't gone as planned, generally speaking, it has something to do with communication and or the operator not meeting those expectations. Right. So that's the very first thing. Is Justin, by the way, a dear friend of mine as well, who's on here, has got a lot of experience in storage. Awesome guy to learn from. One of the reasons that he and I have gravitated towards storage is because it's a pretty simple business, Mike. Like, what are we doing? We're renting space. The operating expense ratio in storage is a lot lower than an asset like multifamily. So just to give you a comparison, in storage, on average, our operating expense ratio is 35%. Multifamily, you're anywhere between 45% to 55%. Now, why does that matter to you, right? Well, we have more margin. It's a pretty forgiving business, right? So I'll give you an example. I have a facility just north of Jacksonville. We're at 63% occupancy. We're on the way to like increase the occupancy so that we could generate more revenue, which trickles down to our bottom line, the net operating income. And we're cash flow positive between $5,000 and $6,000 a month on that one facility. And that's only at 63% occupancy. So we don't have lenders and investors in that particular deal. But if we did, the pie can get carved out in different ways where you're able to meet the ROI, the return on investment that people are looking for, which leads me to my second point. And then I'll kind of pause so that you may be asking me some follow-up questions. Everybody's different, but when you deploy capital, to me, it's more important to make sure that I'm getting a return of my capital. Secondly, I'm looking at a return on my capital. So what's the difference? A return of my capital is you want to protect your seed. You want to protect your principal, which kind of ties back to the whole operator question. When you underwrite and analyze the operator, and it's somebody who's got a track record, there's competency, you can trust, there's a core value alignment, then the risk of not getting your principal back, of not getting a payoff on your investment is probably pretty low. And again, I'm speaking generally. Next, you want to look at, okay, well, what kind of return do I want on my investment? And it's not good enough to say like, well, as much as possible. You got to be very specific and clear based on where you are in your life and what percentage of that capital that you're investing makes up your net worth, right? Like sometimes I see people, Mike, like invest in something that I consider to be very risky, like crypto, and this is not a conversation about crypto, but and they're investing a pretty large portion of their net worth in something that's very speculative, something that has a lot of risk. So you have to look at risk, you have to look at reward, and then you got to get crystal clear on what kind of return am I looking at. I know some people that are happy getting an 8% pref, which is basically an 8% preferred return. It basically means that the investor will get paid 8% off the top before the operator gets paid. And then I know people that they won't look at anything unless they're getting at least 15% return on their investment. So we can kind of pause there, but those are just some of the things that immediately come to mind that I kind of want to share with people listening.
It's great. So I heard Jacksonville. I was like, ooh, I'm in Northeast Florida. I want to hear more. So
yeah.
So with this deal, because when you said Miami, I won't touch because it's a big city, but I hear Jacksonville, I'm like, that's a pretty big city, but I know there's pockets within that area.
Yeah.
So I'd like to hear just almost like tactical. Now we got like an overview. Okay, I'm driving around. Mike Abramowitz, me. I'm driving around my area, Northeast Florida, and I see a mom and pop spot in Palaca or something, right?
Okay.
Maybe there's I see it kind of check some of these boxes, and I actually am like, I wonder if it's a good deal. I look at my criteria that you kind of just rattled off, and listener, you could go back and listen to that criteria: $50,000 mean average house income, the population growth. It's a place that people want to move to, right? You kind of look and make sure it's checking the boxes. Assume it does. What do? I pick up the phone and I call them and say, "Hey, I was driving past your unit. Do you want to sell that?" What is? If you could walk through. Okay, I give them a call. I found a spot. I give them a call, and then what? I tell them I'm interested in buying. Like, let's talk. What is it worth? What is the occupancy? Oh, right. It's 50%. Okay. What is the average rent? Like, is that really how simple? Like, I don't want to oversimplify it. But
No. You're on the right track. So I'm going to answer your question very directly. But before I do that, let's take a few steps back and zoom out.
Yeah.
So in commercial real estate, and storage is an asset class within commercial real estate, it's unlike single family in that in single family, we evaluate the value of a property based on comps, based on comparable sales. In other words, my house is a 3.2, 1,500 square feet. The house down the corner sold for this. It's apples to apples. Well, my house is probably worth in that range. In commercial real estate, and again, storage is no different. The value is driven off of the net operating income, the NOI, which is in its simplest form, revenue minus expenses gives you your NOI, right? The value is based on the income that asset produces. So what are we looking for? I look for opportunities, Mike. And when I say mom and pop operated facilities, the reason I love targeting, and targeting sounds like an aggressive word, but I think you know what I mean when I say that. The reason I look specifically for mom and pop operated facilities is because I find that the majority of these mom and pop owners are in their 60s or 70s. They've owned and operated the storage business for a number of years, decades in many examples, but they don't treat it like a business. What are some simple signs that you can look for that is an indication they're not treating it like a business? You know how many storage facilities, Mike, do not have a website? Now, if I told you 85% of our units were rented online, either through pay-per-click marketing or through search engine optimization, and then I tell you, hey, by the way, this storage facility over there doesn't have a website, like what does that tell you? It tells you they're not really optimizing and they're not operating efficiently. Many of these facilities, Mike, they haven't raised the rates on their units in years. That would be the equivalent of you owning a house that you bought in the year 2000, 24 years ago. You started renting it for, let's call it $800 a month, and we're in 2024 and you've never raised the rents. Like that would be the equivalent. So think about that. Now, why is that important? Because one of the ways you can increase the value of a storage facility is by increasing the NOI, which we talked about. And just one way you can do that is with simple rent raises. So I look for opportunities where owners are not operating efficiently. They haven't raised the rates. And then I can look at the market within a 5-mile radius and I can assess and say, hey, Mike, the 10 by 10s in this market are going for $80 a month, but this particular storage facility is at $45 a month. Well, just by raising the rates to the market, it's going to be a significant needle mover as far as the value of that facility. Now, to answer your question directly, what do you do? There's a couple different approaches I like. And remind me to tell you how I got the facility north of Jacksonville, which, by the way, is in a city called Amelia Island. Think of like the Hilton Head of Florida. Amelia Island is 45 minutes north of Jacksonville. There's about 38,000 people in that market. And I got that deal with no money out of my pocket, 90% seller financing. And I'll kind of walk you through how I got it. But to answer your question, you're driving by and you see a mom and pop operated facility. All you got to do is pick up the phone. And there's a couple different approaches that I like. And I like the latter better. But let me start with the first one. First of all, be very humble, be very direct, honest, and sincere. Immediately tell them who you are and why you're calling. Why? Because what is the number one job of somebody who receives a cold call? It's to get off the phone as quickly as possible. Like I don't know anybody that likes cold calls. So when I call, I merely introduce myself. I acknowledge that this call is random and out of the blue. And I say, hey, Mr. Storage Owner, Mr. Operator, I came across your facility on Google, or I was just driving by it. Looks like a beautiful facility. Clearly, you've done a great job. Now, granted, if it looks run down, it looks like crap, then I might not go to that length. But I would find a way to compliment them, right? Like people like to be complimented. I would compliment them and I would say, look, again, I know this is random, but I'm actually looking to purchase my first storage facility. When I got started, I would say my wife and I are looking to buy my first storage facility. We own some single family rentals, and that's been a complete headache. Why do I say that? Because a lot of people can relate to that and they understand what that's like. And I'll say, hey, would you by any chance, have you ever considered selling? Now, I like to use the word consider because it kind of opens up the door for more dialogue versus just asking directly, are you interested in selling? 9 out of 10 times, they're going to tell you no, right? So that's one approach. The approach which I like much better and has given me much more success is, again, humble yourself, be honest and say, look, I'm looking to connect with somebody like yourself who's knowledgeable, who's experienced, who owns and runs storage. I was hoping for a little bit of guidance. Could you tell me like just a little bit about your experience? Now, why has that approach worked so well, in my opinion? I find, man, that most people, not all, right? Sometimes you're going to come across some douchebags and some people that are not cool, and it is what it is, right? You got to have thick skin, you move on. Most of the time I find, Mike, that people want to help somebody who's like humble, who's genuine, sincere. They've stroked and nurtured them, right? Like they've given them a compliment. And I love the fact that that opens up the door for a conversation. So my goal and mentality, Mike, is when I reach out to a storage owner, I'm not trying to buy their facility. I'm trying to connect with that person. I'm trying to just, I hate to use the word build rapport because I feel like that's so overused, but essentially I'm just trying to build a relationship with the person just to see if, is there the potential or an opportunity? Have they considered selling? So after having that conversation, after that person giving you some guidance, first of all, you're going to learn something. Second of all, people feel closer to you when they talk about themselves and what they're doing. There's something about psychology that, I've been in conversations, Mike, where I've said 3 words. I've just asked a bunch of questions. And then at the end of that conversation, people say, man, I feel like I really know you. I haven't said anything. I've just asked some questions and tried to connect with them, right? Eventually, at some point, trust your gut and intuition to be like, either ask them directly, well, is this something that you've ever considered? But what I even like doing better is I'll ask them indirectly, hey, do you know somebody? Clearly, like, you're well networked, you know a lot of storage owners. Do you know somebody who might consider selling? Man, I'd probably say 40-50% of the time they'll come around and say, well, actually, like, I haven't thought about it, but ... Right? And now you're into a different conversation. So I know that was somewhat long-winded, but those are a few approaches to just instantly connecting with someone. And again, all I'm trying to do is I'm not trying to get any information at this point. I just want to build connection, rapport, start a relationship, and see if there's even a possibility. And then we can kind of get to step 2 as to what tactically to ask that person.
Yeah. And what I love about this is we're starting at the top of the funnel here. So there's 4 pillars of business. There's attract, convert, onboard, retain. So if we're like, right now we're in the attract phase because that's where we need to go from 0 to 1. Now we attracted this prospect and now we might want to convert this prospect. Now at the end of the deal, I want to get a great deal and they want to get a great deal. We want to have some sort of win-win. There is probably some art of negotiation and some science of the negotiation, but how do I know as the investor what is considered a good deal?
Yeah.
And like is a win-win? Like is there a certain metrics that you are basing that off of to say, okay, this amount of occupancy, this amount of like you said, the income minus the expense, right?
Mm-hmm.
I'm sure there's a few of those key, KPIs you're really looking at as measuring sticks.
Yeah.
What might those be?
Yeah, so there's a few pieces of information that are super important for you to ask and receive from the storage owner in order to answer Mike's question, like, hey, is there an opportunity here? So the unit mix, what does the unit mix mean? That's an industry term for basically like how many of each size and type of unit that facility is comprised of. As an example, how many 5x5s do they have? How many 5x10s? How many 10x20s, 10x30s? So if you can get the exact unit mix and their current rates, in other words, what are they currently asking for to rent each one of those units, I have enough information to be able to analyze or evaluate that deal, right? And what we're looking for is if we're able to get that, then now I can go to Google Maps, I can pull up the address of that facility, and there's a little button in Google Maps that says nearby. You want to click on that button that says nearby and type in self-storage. What is that going to do, Mike? That's going to bring up all of the storage facilities that Google picks up around that particular subject facility that you're interested in potentially buying. And storage is it's hyper-focused, right? Like generally speaking, customers of storage are looking at facilities within a 5-mile radius, right? Like I don't know anybody who rents storage 10, 20 miles out. So you want to look at all of the competitors, all the facilities within a 5-mile radius. Now, if you're looking at a facility in a really rural area, like let's say like it's just a bunch of farmland and stuff, then you can expand that radius out maybe 7 miles or so. But when we look at the storage facilities, what I like to do is I like to go to their websites and look at their rates. And then I'm taking an average of the different unit sizes and I'm comparing it to what they're asking in rent on the subject facility. And what I'm looking for, Mike, is the gap. I'm looking for the delta between what this particular storage owner is asking for in rent and what the average of the market street rates are for the different units. The bigger the gap, the bigger the opportunity, right? The other thing I'm looking at, you talked about KPIs, right? Like I want to evaluate the deal on 2 fronts, really 3, but I look at, okay, what is the facility worth based on the current income that it's producing, right? We talked about how to evaluate in commercial and storage. So let's say the facility generates, $30,000 a year net operating income. Well, based on a certain cap rate, and a cap rate is, again, another fancy term. It's basically an expression of value based on the income the asset produces. So if a facility is bringing in $30,000 in revenue, at a cap rate, that facility is worth $30,000 in net operating income. On a cap rate of 10, that facility is worth $300,000, right? In theory, based on the cap rate, right? Which is 30,000 divided by 10% gives you a $300,000 value. Now, I also like to look at, well, once I raise the rates, what would the revenue be minus my expensive, what would the potential net operating income be once I raise the rates? And I'm generally offering, right, depending on the seller situation, to your point, there's kind of, it's art and science, right? How you speak to these people. I'm trying to make an offer based on a return that's going to make sense for me, but I'm taking into account the current value relative to what the value will be once I like pull one of the levers, which is just raising the rates. Right. I'll kind of pause there, but does that make sense? I know sometimes on a podcast it can get kind of into the weeds without a whiteboard.
Well, no, you're right where I want you to be, which is I totally appreciate this, because this is probably stuff you offer like in your coaching programs and behind the paywall stuff. So I think a listener's hearing this and they're like, "Damn, I want more of Alex." And I'm sure you'll tell them at the end on how they can stay in touch with you. But what I hear is, are there other variables? Like I'm hearing like, what if the space has like a roof that is shoddy, and that's like an extra expense? Or what if there's like other other unspokens outside of this that I want to take into consideration? Is that like step 3 or step 4? After like I get this information, then if this checks the first box, then I'll go into box, the next few.
That's exactly right, Mike. And look, and I'm not naive enough to say like, hey, this is the only way, or this is the quote unquote right way to do it. This is a way to do it. This is our way, right? So I'm generally not concerned about the condition of the property until I go under contract and there's something called the due diligence phase. Typically speaking, I like to bake in 45 to 60 days of due diligence. This is like our no risk period to go and make sure that the business we are buying, side note, Mike, one of the many reasons I love storage is that it's a business that has the benefits of real estate, right? It's not a real estate play. It's a business that have the benefit of real estate. So during this due diligence, that's when I'm evaluating, okay, well, what are the condition of the roofs? What are the condition of the doors, the hasp, the springs, and I am making sure that if there's money that needs to be put into that facility after I buy it, right? Whether it's new roofs, it's what we call capital expenditures. I make sure that I bake that into my offer. And I know that if I have to go out to a bank, or if I have to go out to like an investor or a lender, then I'm baking that money that I need for the capital expenditures into the deal. Like we never fly blind or by the seat of our pants. We always make sure that we're in the due diligence, we're dotting our I's, we're crossing our T's, and we're structuring the deal based on all of these components and all of these factors, right? So I'm not worried about the roof and the doors and the condition of this facility when I'm initially speaking to the owner. That's kind of step 3, 4, 5 down the road.
And when you're going into this, are you anticipating holding on to this property as a cash flow vehicle for a certain period of time, or are you looking to build it up and flip it and sell it, or is there multiple part of that strategy potentially?
It depends is the real answer. Now, let me try to dissect that, because it depends doesn't really add value to anybody listening. In real estate, one of the things I've realized, Mike, is that you have to know the exit strategy before you go in. Like you can't buy I shouldn't say can't. You shouldn't, in my opinion, buy a facility and then try to figure out what you want to do with it, right? Like you want to have the plan going into it. It's like starting a business like without a plan in place. Like, hey, I'm just going to start it and I don't know what the goal is, right? So you have to think through, is this a market you want to be in? Is this an asset that fits what you're looking for long-term? Like I'll give you an example. My first and third facility, I bought in a market that I don't really care to be in long-term. My play when I bought those was to buy it, stabilize it, which is i.e. increase the occupancy, increase the revenue and the net operating income, turn around, sell it, then now take that capital and redeploy it into a market that's going to be something where I want to be in long term. My facility in Amelia Island, it's a fantastic market, very affluent area, great piece of real estate. We got phenomenal seller finance terms. That is a long-term hold for us for cash flow. Whereas my ones in Mississippi, it was a 2 to 3 year play to turn around, stabilize it, and then sell it.
I got to ask on the seller finance, because I've asked this question to a couple of our guests, and every time I'm like, I think I get it, but then I really sometimes don't really get it. So
I'll do my best to simplify it.
So seller finance, the way I understand is the seller is holding the note essentially, where if I default payments, instead of paying to Bank of America for my loan, I'm paying to the seller of the storage unit in this case. They end up being the bank. So my interpretation is they're the bank. I'm paying them monthly payments. And if just like if I don't pay the Bank of America these monthly payments, Bank of America is going to say, well, you've defaulted on your payment, and whatever I gave them as collateral for that money, then they keep whatever that is. And then for the owner of the property, the collateral that they're keeping is my storage unit that they used to own. Now they own it again.
You nailed it.
So is that essentially?
Dude, that's it. Like, you stole my thunder. It's in its simplest way, and Mike just did a beautiful job of explaining it. The seller becomes the bank. Instead of like going downtown or working with a bank that has like a massive skyscraper, the seller becomes the bank. Now, why some people might be thinking, Mike, like, why would a seller want to do that? I'll give you a perfect example. The gentleman that we bought the facility in Amelia Island from, super nice gentleman, lives in Cleveland, has his own practice out there. His sister was running the facility. Again, wasn't really fully running it like a business. And he was earning a certain amount of income from the facility, but he had all the operational headaches, the management headaches. He had the lawn and the taxes and the insurance and all that stuff. Well, he wanted the income stream without the tax liability of selling, because when you sell, that's a taxable event, right? He wanted the income stream, but he didn't want all the management headaches. So I proposed to him. I said, well, Mr. Seller, and he was asking for a certain price, which was a little bit on the high side. It wasn't crazy, but it was a little higher than what I would have paid had I not gotten the seller finance terms. I said, well, Mr. Seller, if I'm able to give you your price, would you be open? Would you consider taking payments over time? Oh, well, Alex, what do you mean? Well, basically, what if we did like a structured a seller finance deal where you become the bank, and now you no longer have the responsibility of the operations of the business, the taxes, the insurance, the management, the team members. We'll take care of all that, and we just pay you monthly every single month, but you don't have to deal with any of that. Oh, interesting. Tell me more. And then we started talking about it. So we basically turned the seller, who owned that asset free and clear, by the way, we turned them into the bank. The benefit to us is that we didn't have to jump through hoops like with appraisals and third-party inspections and phase one reports and all this type of stuff that a bank is going to require. We were just able to simply structure a seller finance, and there's a promissory note, there's a mortgage, and then that's pretty much it. The title company handles all the paperwork. Now we just negotiated and agreed on the terms. So we got really, really good terms that we could never get at a bank, right? In fact, we were able to negotiate no payments for the first 12 months. So we were able to buy this asset, and we didn't even have any debt service payments for the first 12 months.
But you'd have to put it down. If it's like 90%, you'd put 10%. Correct. You give them a lump cash up front.
Exactly right. So in this particular case, we bought this facility for $2.1 million. It was 90%. So he gets
an influx of $200,000 straight up. Boom.
Exactly right. And where did I get that $200,000? I went to a private lender, and I paid him 10% interest on that money for a 1-year term. Right. So that's how I was able to get into that deal.
That in private lender got $20,000 on his 200, and you got 200,000 to put towards this property that is bringing in a revenue of a certain amount each month.
Correct.
So during those 12 months, if this property is valued at 2 million, might be bringing, is there a value where it's like, it's probably about 10% monthly, or 5% of the valuation is usually what the monthly.
So dude, you're asking great questions, especially for somebody that, to my knowledge, Mike, you're not in the storage business, are you?
I'm not.
All right. Well, check this out. So I mentioned earlier, we're currently at 63% occupancy. Well, that facility generates between $21,000 and $22,000 a month in revenue, in top line revenue.
So it's about 10%.
Correct. But that's at 63% occupancy. Like, there's a lot of room for growth.
Or I guess that's 1%, right? Well, would 20K of 2 million would be
correct. 1%.
1%.
Right.
So 1% approximately of its valued property is about the monthly distribution approximately.
Well, that would depend on the occupancy. So It's not black and white, because if that facility was 50% occupancy, then we would be generating, I don't know, call it $16,000-$17,000 a month. Yeah. Okay. It'd be less. It depends on the occupancy. It's not like a black and white ratio per se.
It gives a base of potentially, if you have approximately 1% of the value, that means you're probably doing okay with the occupancy potentially. So just doing some quick math for anyone listener, let's call it $20,000 a month is coming in over 12 months. That means I recouped that person's investment, that $200,000 that person gave me, I give that person their $200,000 back plus their interest of 20 grand. And now I'm free and clear. So now I don't have any debt to that private
Correct.
lender.
Once you pay them off.
So I paid them off. I got their 220,000. I got the 240,000 from the property. But now year 2, that 20,000 a month I'm getting, I got to pay the owner of the property. So whatever the payment is, whatever my terms were that I had to pay that guy or that person, what might a monthly payment be on a $2 million
in this
deal?
in this particular case, it's a 3.25 fixed interest rate on a 5-year balloon. So our monthly debt service payment is just under $7,600 a month. It's like 75 and change.
Okay, so 7,500 goes to the owner of the property, and that means I'm keeping the other 13 something thousand.
Well, we have expenses of about 35%. So we have expenses of roughly $6,500. So think of between debt service, our payment to the bank, which is the seller, of $7,500 plus about another $6,000. There's about $13,000 to $14,000 eaten up out of that $21,000 revenue.
Yeah.
So think of the cash flow we're generating, right? Once we pay the debt service. And again, the beautiful thing is we're only at 63% occupancy here. Like the numbers get really sexy kind of when we get to 80+% occupancy.
What's really great is then once you got this kind of one machine bringing in this predictable $3,000 to $5,000 to $6,000 in profits each month, could you just then going one, now that I've won, I can leverage against this one to buy number 2 and say...
Yeah, right? for sure, Mike. I've always, my experience and the people that I've worked with is the first facility, like anything, right? Like the first facility, generally speaking, is the toughest one. But once you get that one, it just kind of opens the floodgates for more opportunities to come to you.
Damn, Alex, dude, you listener, you got a masterclass. I'm picking his brain because I know how much value this type of content is for the listeners of the show. And I know we could go in so many different directions, and I'd like to go in a couple of different directions. Anything else on storage specific before I completely pivot in a different direction?
Look, it's just in my humble opinion, right? And maybe I'm biased. I think it's the best asset class for a variety of reasons. Mike, I recently gave a presentation and I kind of like broke down like why I believe storage is one of the best asset classes. And I got even deeper in that presentation just because of the time we had. I'm happy to share that if you want as a giveaway. There's no like opt-in page or anything like that. People can just watch the video if they want. It's just a great asset class. I'm happy to help however I can.
That's amazing. Yeah, we will definitely take you up on that. So however we, decide to link that when this is released or whatever that makes sense, that would be really, really, really helpful. I'm sure some people would love to take you up on that. Cool, man. So to go in a different direction just for you, because you would be someone that I would say lives a lifestyle that's better than rich. You understand the idea of taking care of yourself, your family, the important things of life. I mean, you visited 23 countries, 51 different cities. You backpacked Europe for 3.5 months. You've taken this time for Alex to learn about Alex, but then you also have these rituals and routines with your kids where you're getting them up at early morning, 5:30, 6 a.m., getting quality time with the kids before they go to school. You're an intentional dad. You're an intentional husband. You're a man of faith. You do like retreats, religious retreats with your wife. Like you're mission driven. How might somebody listening to this show that is feeling like a small piece of like either scarcity or a small piece of like, well, that's good for Alex. I don't know if I could ever get there. I'm so in the weeds of like the shit of life and business. I'm in a winter season right now. There's no fucking way I could see myself traveling and backpacking. There's no way I can see really being this person of faith. There's no way I could see like dedicating mornings to my families and dedicating this time that I want. I'm just so in the weeds. It's hard for me to even experience the feelings of time freedom. Nevertheless, experiencing the time freedom. What might you say as far as a strategy, mindset, anything that has served you during all of those different seasons that you've navigated through that might be what help them?
Dude, I love this topic. And again, another one that we can go in so many different directions. Here's the first thing I want to share with people is like, this is a breathing exercise. Like take a breath, like understand that where you are wherever, whatever season of life you're in, no matter how, how your business is operating, performing, wherever you are, take a pause, recognize it as the gift that it is, because you are where you're supposed to be. Now, it doesn't mean that's where you want to stay, but sometimes I find that emotions like guilt, shame, judgment come up because people feel, and it could be because of social media, it could be because of a lot of things, right? And that's a different conversation, but people feel like they should be further ahead in life, or they should be at a certain level in their business. They start comparing themselves, right? And there's a quote that says, comparison is a thief of joy, which I absolutely love. So it's a breathing exercise. Understand that change is not going to happen overnight, but if you start to be very intentional about your thoughts, your decisions, your actions, compounded consistently over time, the right thoughts, actions, and decisions can lead to whatever life you want to live. I don't care what it is. The other thing is, I think it's super important, Mike, to have clarity and have a written vision for what you want your life to look like. This is one of the things I learned over a decade ago is, I used to be motivated by money and real estate and all these material things. And there's absolutely nothing wrong with those things. Those are all toys that are meant to be enjoyed. But when you get clear on a vision, in other words, what you want your life to look like, what do you want it to be about? You talked about being purpose driven, right? Without regards to money or possessions, get clarity around what do you want your life to look like. Then you can go about tweaking, designing, modifying, building a business that is aligned with a desired lifestyle that you have, right? When I look at people's calendar and I look at people's bank accounts, that tells me their priorities. And what I find is that most people's calendars are filled with like meetings and work and all the different things they have to do to make an income and make a living. Well, what if you flipped the script? What if you looked at a calendar and you said, hey, I'm going to put in the things that are important to me. I'm going to put in spending time with my kids. I'm going to put in going on a trip. I'm going to put in spending time with my family, giving, contributing, reading a book, whatever fills you up, right? These are the things that make up your life vision. Then look at, okay, well, what are the gaps in the time that I have for the business? And you might be thinking to yourself, well, I can't build a business or I can't tweak a business in X amount of time. Well, yes, you can. It's just a limiting belief, right? So I think that's one thing I would share is just getting clarity about your vision. The other thing, Mike, that I think you and I have done, man, is just we've been very thoughtful and intentional about the people that we surround ourselves with. You and I met in a community because we were seeking to be not just better men, but better fathers, better husbands, right? And like, by the way, man, as I was listening to you kind of talk about me, like, dude, I want to be crystal clear, like to the audience, that I do not have everything figured out. Like, I got my challenges, I got my issues. I'm broken in many ways, because we are in some way, shape, or form. So, like, yes, I figured a few things out, but there's a lot more I haven't figured out, and I'm on this journey just like you, right? But one of the things that I've gotten crystal clear on is like, I need a support system around me. I need people like Mike that I can reach out to and say like, dude, I'm struggling here. Like, you've been there. Like, can you give me some insight? Right? Like, to me, that's the ultimate insurance policy. And then this may turn some people off, and that's okay. It's just, I'm not, pouring my belief systems into you, but like my faith, my relationship with God is extremely important to me. And I just have supreme faith that peace comes from him. And no matter what I'm going through, it might suck, it might be challenging, but I know he's going to pull me through. And I just have that faith and belief. And brother, the amount of peace that gives me is it's hard to quantify it, it's hard to convey it, express it. But those are some of the things I believe that I've kind of figured out along the way.
It's a great response, Alex. And something that we talk about inside of like our time rich masterminds and some of the groups that we have is the F's, right? It's really simple to remember: the family, the friends, the fun, the fitness. And then there's like the finance, there's faith. But the finance is what a lot of people get consumed by. It's the consumption of the finances before they pursue and make space for those other F's. And what I love about what you're saying is I am intentional with my family time. I'm intentional with my faith and my connection to myself, my mental fitness and my nutrition and my health fitness, right? Yeah. So being intentional with some of those things and understanding what the priorities are, they're really critical. And by the way, we've had conversations on the show about faith and religion. And one of the themes that have come up for us in conversations is that most people that we encounter have some sort of faith, but the people of those organized religions is what has turned them off more so than the actual religion or the actual faith itself.
That's right.
Because people project their own shit. It's like, oh, you're not Jewish enough. I can't tell you how many times I heard that inside the religion, or oh, you didn't go to church on Sunday. Ooh, or like the sins and stuff. Like, it's just like the people kind of damper down. But for those of us that are connected to a higher source, whether you call that higher source, the universe, God, one, source itself, whatever you want to call that, just being connected to something that's bigger than what is. I do believe that most people listening to this show are connected to something outside of themselves. So my curiosity under that lens of why I even give that framework is, what do you do with that connection to the source, whether that source is whatever that source is, you're a man of faith. What is that conversation? What is that connection? We understand what it brings you. Great. Maybe you could describe that, but also, what is the practice there? What is the embodiment of those feelings? Like, because it's sometimes I feel like people might say, great, I have that connection, but maybe I don't strengthen it enough, or I don't visit it enough. So maybe there's a practice. Maybe you could just riff on something like that.
Yeah, man. No, I love it, dude. Think about getting married, right? And then not spending time with that person. Like, Mike, I'll ask you, like, what happens to a relationship over time if you're not investing time with that person, if you're not communicating with them? Like, it falls apart, right?
Yeah.
It's the same. This is the same way that I view my relationship with God. It's like when I'm going through like a dark season of my life or period, most of the time, dude, I'm not connected to the source. I'm not spending time with God. I'm not intentional about like carving out time in the word, prayer, having conversations about my faith, having conversations about God. And again, if God doesn't resonate with you, then replace it with whatever your higher source is, right? I'm just speaking from my perspective. So like any relationship, man, I think we need to devote time and energy towards building that relationship and communicating with that person. In this particular case, God, higher source.
Can I
right?
ask
And so
a
when
question
we talk
there?
about a practice, yeah, go ahead.
Just to capture it, because I think people, myself, I'll talk for myself. I hear conversation with God and I think about meditation. I think about stillness. So I almost kind of blur those lines. And then when I hear reading the scripture, my mind goes to, well, that's kind of like reading a book that was written by man. So why read that script? Could I replace that scripture that was written by man, passed down by God, versus another book that God created that is also written by man that maybe appeases me? So I start asking so many of these different questions. So I start questioning versus the actual behavior of doing of what you're saying, which is the conversation. So what is for you? That's all you could speak of is your truth. What is the conversation, and what is the reading that you're feeding your mind to fuel the conversation? And does the location of when you're having the conversation or the timing of this conversation, any of the logistics that go behind that satisfy the logical brain for something that is fairly illogical?
Yeah, no, man, it's and by the way, man, this could be a whole other podcast. And I mean, dude, and by the way, again, I don't have all the answers, right? To your point, I can just speak from my perspective. First of all, to address the timing doesn't matter for me. Like, you got to figure out what works. But like for me, God's everywhere, whether it's I'm on a walk or whether I'm traveling, I'm in a car, or right now in this podcast, like, I'm feeling his, like, it doesn't matter. Timing doesn't matter. Like, he's available to all of us, all who believe anyway. And I can connect to that source whenever, right? There's a daily devotional that I recommend for people that are interested in going deeper in their faith or Christians. It's called Jesus Calling by Sarah Young. And it's just, I read a one-page daily devotional every single day. In fact, I just read it to my daughters this morning. And one of the biggest gifts, I think, if not the most important gift that I think parents can give their children, is a relationship with God or whatever you believe in, right? And so I love reading that book because it grounds me and it gives me just practical wisdom. Right? Like today's reading, I think, was about like, don't worry about the things that haven't yet happened. Like cast that to him. Like, don't worry, but just live in the present. Right? Like just little practical steps of wisdom like that. So I don't know if that answers your question, man. But like from a timing perspective, it doesn't matter. I can always connect to the source. And when you talk about prayer, like a meditation is a form of prayer, right? So like prayer doesn't have to look like any one way. It's whatever can like really resonate with you, like whatever brings you peace, whatever makes you feel connected, if that makes sense. If that's meditation, fantastic, right? Man, sometimes I'm doing things, sometimes I'm out on a walk in nature, I'm looking around and I'm like, and I automatically feel connected. Like that's a form of prayer to me, where I'm just thinking, I'm like, I leave this, right? And I just go for a walk and I just try to connect, man, to nature, and I just appreciate, I express gratitude. Like to me, that can be a form of prayer. So, anyways, some people, I may have lost some people, and some people think I might be crazy, but these are just some of the things I believe.
It's great. It's great, Alex. And what's interesting, I find myself, especially if I'm doing like a cold plunge or something, I'm just saying, thank you so much.
Mm-hmm.
Thank you so much. And like, those are the words that are coming out of my mouth. I don't know who I'm thinking. I don't know who my conversation is with. It's not labeled necessarily, but to your point, more than likely, that seems like it's my conversation with God, where I'm just thanking him for the courage and thanking him for the ability to navigate this, whatever it might be. Thanking him for thinking for life. I mean, there's so many circumstances that I could think of where I just had that conversation out loud. It's not directed towards one specific name, but I've had that conversation, and I love that you have given a glimpse as to the type of human you are. Even just having a conversation with your kids around devotional is a great respectable habit. So, Alex, we like to ask every guest 3 questions before we head for before we end every episode, and they can be short hitting, whatever direction you want to go. And then I'm sure people are going to stay in touch with you, so you could, we'll give them some information there. But the first question is, what do you think the world needs most today?
People that are willing to give of themselves, people that are willing to contribute without an expectation of something in return. I think imagine a world where people were there to like try to positively have an impact on people's lives, give, contribute without having their hand out for something in return. Too many takers, not enough givers.
That's great. Second question is, what is 1 to 3 books that you think people should read?
I mean, I mentioned the Jesus Calling one by Sarah Young. I love, I think it's Bob Berg, The Go-Giver, right? The Go-Giver is my favorite. I think he's got a series of those. There's like 3 of them. I think I see one right behind 10X is easier than 2X. Anything, right there. Anything Dan Sullivan and Benjamin Hardy, I'm a huge fan of. Who Not How, The Gap in the Gain. There's several others. So there you go. By the way, and this might seem like a lazy answer because Mike has just an incredible library behind him. I'm sure that's just a small percentage of it. But dude, I could grab those books within 2 or 3 minutes. In fact, there's The Go-Giver right there, the red book. And those are all books that have had a big, big impact on just the way that I think and how I act and how I try to live my life.
It's great. Great resources. Final question, and then we'll let people know where to find you, is what does it mean to you to be better than rich?
Better than rich. By the way, I love the name of the show, man, and how you've branded that. Better than rich is living a life of gratitude, living a life of abundance, living a life of just genuine joy and fulfillment. Notice I didn't say happiness because I think happiness can be momentary, but joy is lasting, joy is sustainable. So I think a life of contribution, man, a life of like one of the exercises, I'll end here in a minute, but like one of the exercises that my wife and I went through at an event about a decade or so ago, and it had just a lasting impact on me. I still think about it today, is the eulogy exercise. And maybe some of you have heard of it, but it's a 2-part exercise. And it goes like this. It says, well, if you passed away, but you had the ability to view your funeral and you had the opportunity to listen and watch somebody give a eulogy about you, the first thing is, what would they say about you? And what would you want them to say? The second part of that is, what would they say if they absolutely couldn't lie? If they took truth serum, if they were on a lie detector test and they had to tell the truth about you, what would they say? And is there a gap between what you would want them to say and what they would say? Those are the things that we want to start making progress on today, because as cliche as it sounds, like, we don't know if tomorrow's going to be here for us or not. It's not promised. And so is there a gap between the life that you're currently living and the life that you would want to live based on what somebody would say about you if they couldn't lie.
It's awesome. Alex, I'm sure people are going to want to stay in touch if they wanted that video, or if they want to stay in touch with you, if they want to learn about your mastermind group, anything. Where could they go to learn more?
Yeah, a couple quick ones, man. And thank you, Mike, once again, man. This has been a lot of fun. I really appreciate the opportunity to kind of share. If you guys just send me a text message, I'll send you the Dropbox link to the video, because honestly, I don't have it behind like a squeeze page or online, anything. But 305-318-6213. 305-318-6213. So shoot me a text and I'll send you the Dropbox link. I've been hosting a podcast called The Flip Empire Show, which I'm really looking forward to having Mike on. I think we're going to get into some really interesting conversation there. So if you guys just Google The Flip Empire Show, we're on Apple Podcasts and all the different platforms. And then if anybody's interested in getting involved in storage, whether as an investor or maybe even learning the business and going out and finding your own deals, www.storagewins.com.
Awesome. And I just went to the website, storagewins.com. You could apply, you could fill out the information. Highly recommend texting Alex, stay in touch with him. Thanks again so much, Alex, for your time. And listener, thank you for listening to the show. We couldn't do it without you. And you've probably seen a bunch of information coming your way about Time Rich and our virtual install events that we've been doing. And I'm excited about this new mastermind that we launched. I'm excited about it's all under the umbrella of installation. I feel like information and education is not what business owners want anymore. They want install, they want execution, they want implementation. So I'm holding space for business owners to get stuff done. In fact, some are even flying in here to St. Augustine to hang out with me for a couple of days to actually work on some parts of their business. So if that's appealing to you, check your inbox. I'm sure more information will be there as you're taking a listen here. So thanks again for listening. And as always, leave today better than you found it. Till next week.